Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you're new to the page, follow that prompter below and hit the like, subscribe, and the notification bell. And if you part of the Stock Up family, just continue to hit that like button. And make sure you're still subscribed so you can get all of the notifications. Anything I say is not a suggestion for you to buy, hold, or sell stocks or crypto. And lastly, do not fall for spam in the comment section. I don't manage anybody's money. I don't have a WhatsApp. I don't have a Twitter account. I do have Instagram, all right? But make sure you click my Instagram link below, okay? So, and make sure you check out the top 3 links, all right? So, CPI came out, and let's just take a look. This is my, this is my phone, right? And as you can see, the Dow is doing good, Nasdaq doing good, S&P doing good. Everything is okay. Everything is smooth. So let me put some glasses on so we go over a few things. I'm going to talk fast so we can keep it going. Stocks rallied on lighter than expected inflation data. We expected, the beat was 8.7. That's what they expected. 8.7 as the consumer price index number, CPI. But it actually came lower. It came out 8.5. Remember, the prior month, it was 9.1. So it's just showing that inflation is slowing down. Not stopped, but slowing down. Remember, just a slowdown is good right now, right? And so we're looking for peak inflation. We wanted to peak out, turn around, and start going back down. Now, there's talk about the Fed instead of doing 75 basis points on his next interest rate hike. Remember, there is no FOMC meeting in August, so September is the next FOMC meeting where the Fed verbally says what he's going to do as far as how many basis points he's going to increase, decrease, or do nothing with the interest rates, all right? And so that one will be September. And so now we're expecting 50% instead of 75%, which will actually do good for the stock market. Okay, so we got all of that going. Let's see what else we have. Housing is lagging, so it hasn't slowed down as much. Though it has slowed down, it hasn't slowed down as much. Core CPI. It hasn't slowed down as much as inflation has. So that's one of the things. All right. So we got the PPI numbers coming out tomorrow. That's Thursday. Remember on an earlier video, I explained the difference between CPI and PPI, and then core CPI, which is what the Fed usually goes on, right? So after the closing bell, you got Disney reporting, and Disney is a beast. Disney is a big boy. A lot of people ask me what I think about Netflix, and I am not into Netflix at this point. I like Disney better than Netflix because Disney has a lot more to offer. Just Google everything that Disney owns and what they're into and prepare to get your mind blown. All right? Netflix, streaming. Disney, everything imaginable, they're into it. So that's why I like Disney better. But I believe that Disney is just getting into fair evaluation territory. So it's not on sale yet. So me personally, I'm going to continue to wait for Disney to continue to fall. So let's go here and let's do a little reading right here if my glasses will focus. And so look, this article, remember, whenever you read an article or look at a video, make sure you check the date, okay? This is a Yahoo article. This was May 23rd, 2022, okay? And so it says here, let me get that out of the way, good people. All right. It says the good news for traders is a U.S. recession is almost fully priced into the stock market. Remember, this was then. All right. The bad news is it's not 100% priced in. With the S&P down about 19%, but right now the S&P is down about year to date. It's actually down about 12%. And actually, if you go to the highs, all right, let's go the S&P from the highs, it's actually down about the same. See here, about 12%, 12.5%. So year to date, we're down about 12.5%. All right, so that's where we are with the S&P. Let's continue reading. All right, so pricing in. Okay, so here it is. January 3 peak to 39.01. All right, we're talking about the S&P. The market is effectively priced in a 60 to 75% chance of recession, according to new analysts from whoever this guy is, chief investor, right? So let's read down here. Historically, the S&P has fallen on average of 29% around a recession, with a medium drop of 24%, Leonard noted. That's the guy who's doing this report. All right, where's the others? Sorry for scrolling. This is what I want you to see. Lerner offered one tiny bright spot, all right, and that is once stocks have fallen their lows during a recession, okay, the average 1 year forward returns is 40%, Lerner stated, okay? And so remember, we just can't read one report and go and run with it. There was another report that showed that most of the times that when we're in this type of environment in the trading, that stocks could go and the S&P could literally hit a new high before the hard crash of a recession. So I'm not recession hungry. We're just trying to find out where are we so we can trade accordingly, right, good people? So where are we in this market? Leave me a comment if you believe that the bottom has happened, because there's more and more evidence that is proving that fact. But myself, I'm still not convinced because they moved the goalpost. They changed the meaning. They changed the rules, okay? And we've been here in 2008. So are we going to trade money? We're going to continue to trade this market? Yes. Are we going to continue to make good moves, smart moves? Yes. Do you think the worst of the recession is yet to come, Larry? Yes, yes, and yes. Do you know where the bottom is, Larry? No, no one does. So you tell me what your plan is. What I'm doing is I have an offensive portfolio and I have a defensive portfolio. My offensive portfolio is in my Webull app. And then my defensive portfolio, of course, is in my Moomoo app. And my defensive portfolio so far just has cash. That's it. I'm just putting cash in there. And now I'm going to start to buy. Now, let me bag up. I bought a little gold when it dipped down. So that's my first defensive play is gold. And I'm only buying gold when it tanks, when the dollar goes strong and gold goes low. And then I'm going to do a little healthcare. I like healthcare over energy because of the geopolitical situation. Anything could happen. Oil could just turn around on a dime, right? So I sold all my oil, at a high. And I've just learned sometimes when you get in a play more than one times, especially after you did a win, sometimes you lose. So I learned from my mistakes. You tell me what you're doing. So let's look at crypto. So Bitcoin is up, Ethereum 2, Tether, US, BNB, XRP, you see, they're all green. Crypto is doing extremely well. DOT is up 7%, right? So at crypto, Polygon 3, Uniswap 9. So crypto is reacting positively. Near Protocol is up 9. Crypto Chainlink, which is one of the ones I have, up 5.5%. Crow 3. So as you can see, crypto is reacting positively on this also. And so my crypto is doing well, and so is yours. So that's what I wanted to tell you on today. Now, what I want to do right now, because a lot of people have been asking, hey, you gave us your top 5 out of your 3 portfolios. I have 3 portfolios. I have a growth portfolio, an ETF portfolio, and a blue chip portfolio. And I have a array of stock in each one of them. It's called the Larry Jones $5 a day challenge. I've been asked, what are your top 5? And my top 5, I've been telling you, as far as dollar cost averaging in, again, is Apple, Microsoft, Google, VOO, and VTI. And yes, Google is in VOO, but VOO and Google are going to move differently, okay? These are just my top 5 based on what I like to invest in long term. We're talking, we want to keep these for 10 years. And so that's what I want to do. It's Webull Wednesday. Deposit $1 in Webull and get 12 free stock worth up to actually now $30,000 with Webull. All right. So check this out, good people. In the center here, you see there's recurring investment. We're going to tap that. And let's start with Apple, AAPL, right? We're going to select Apple. And then here it says minimum. So what I'm going to do is I'm going to pick weekly. And let's say we're doing $10 a day. So 10 times 7 is 70. So we're going to put 70 here. So that's $70, right? And so now, let me scroll that down. What is the frequency in what we're going to buy? It says every week. As you can see, it says every 2 weeks, every month, every trading day, depending on when you get paid, right? All right, so frequency every week. Date, Monday, all right? So we're just going to go with Monday because we got, Saturdays and Sundays, weekends, stuff like that, right? So that's what we're going to do. Then we're going to hit next, and then we're going to hit confirm. And then you are now what's called drip buying, all right? Now, as you can see at the bottom there, it says modify. I can modify this order. I can cancel this order. I can change it to every month or every bi-monthly, depending on your needs. Now we're going to do the same thing with Microsoft, Google, VOO, and VTI. So there you have it. Like I said, 12 free stock with Webull. My link below in the description. If you're on the phone, just click the title. Download Webull, put $1 in, and just get the free stuff, good people. But don't just get the free stuff. Let's do some trading. Set it on drip buying, like I just showed you. That's drip buying. So you are building generational wealth on automatic. Protect your money from you. And then also Moo. Moo is where we're doing our defensive trading. So right now we got some gold in Moo. I'm going to be giving you guys some other stock to deposit in Moo. And as you can see, another 10 free stock worth up to $2,500 by depositing $100. Hey, good people, that's it. The CPI number is what it is. It's a good day. And you know what? I haven't played this jam in a while, so I'm going to go out with this jam. Peace. We'll see you later. Live, love, laugh, and learn. What's up, good people?